Okay, let's unpack this. We're diving into a transaction that, on the surface, looks pretty straightforward.
Right.
But beneath that headline, there's this really complex story of risk, strategy, and just, billions of dollars moving around in the world of EVs.
It's so much more than just a factory sale. It's
Yeah.
really a re-engineering of a massive joint venture. We're
Yeah.
talking about that huge $4.4 billion EV battery partnership in Ohio, the one between Honda and the battery giant LG Energy Solution, or LGES.
And the whole structure of that deal, which was supposed to be the foundation of this Honda EV hub, it's fundamentally changed.
It really has.
So the sources you shared lay out this pretty significant asset transfer. Honda is taking full ownership of the factory building itself from LGES,
Mm,
and our mission in this deep dive is to get past that simple announcement and figure out, why now. We need to unpack the finances of this nearly $2.9 billion deal
right.
and understand the strategy behind the sale and leaseback thing. And maybe most importantly, connect it to all the turbulence we're seeing in the industry.
Especially that big pivot toward energy storage systems that LGES is making. I
Exactly.
mean, what starts as what looks like an internal accounting move, it quickly tells you so much about how these huge global companies are de-risking their investments right now.
So let's start at the beginning, the original project.
Okay, so the initial commitment, that was back in October 2022. It set up the LH Battery Company,
A 50-50 joint venture.
a 50-50 joint venture, yeah, backed by that $4.4 billion investment. The whole goal was to build this mega factory in Ohio with a very ambitious capacity of 40 GW a year.
And the timeline was aggressive, wasn't it?
It was. They originally hoped for production by the end of 2025, but that's already slipped a bit. Now they're looking at sometime in 2026.
And now, before the factory is even running, we get this massive asset sale. What are the hard numbers? What's LGES getting from Honda here?
The price tag is very precise and very substantial. Honda agreed to buy the physical plant assets for 4.22 trillion Korean won,
Wow.
which, depending on the exchange rate you use, it translates to right around $2.9 billion.
And that's not a small adjustment.
No, I mean, for context, this one sale makes up about 7% of LGES's total consolidated assets at the end of last year.
Oh, 7%.
Yeah, that just tells you the sheer scale of the building costs alone for one of these gigafactories.
7% of a global giant's assets all tied up in one building complex in Ohio. That really puts the expense of these things into perspective.
It does. But here's the really critical nuance, the detail that makes this a smart financial move and not just a simple split.
Okay.
What did Honda actually buy for that $2.9 billion?
The building itself.
Exactly. They bought the factory building, all the infrastructure that goes
Mhm.
with it, the shell, the walls, the roof, all the fixed mechanical systems.
And just as important, what was left out of that deal?
Crucially, LGES kept ownership of two key things: the land underneath the factory, and, more importantly, all the highly specialized, very complex production equipment.
The actual machinery that makes the batteries?
The machinery that makes the cells, yes.
Yeah.
And that distinction is vital. This is not a divorce. It's a very targeted transfer of the biggest fixed cost, which is construction.
And the deal closes in early 2026, right as the factory is meant to be coming online.
Right around then, yeah.
So if I'm getting this right, Honda now owns the physical building, the structure, but LGES still owns the tech, the process that goes inside it.
You've got it.
It almost sounds like a really, really expensive real estate deal where you have a guaranteed tenant from day one.
That is the perfect way to read it strategically. And that brings us to this wholesale and leaseback arrangement. I mean, why would two partners in a joint venture do something so unusual?
Let's start with LGES's motivation. They're offloading a huge capital burden here. The sources call the construction costs a significant portion of the investment.
And the largest portion, even.
The largest portion, right?
For LGES, the main goal is efficiency and liquidity. Construction costs are just capital that's locked down in a fixed asset in a building for years before it makes you a dime.
Right, it's just sitting there.
By selling the building to Honda, LGES instantly frees up that $2.9 billion.
Yeah.
They turn a slow, fixed asset into cold, hard cash they can use somewhere else. It lowers their capital spending burden right now when the market is, a bit shaky.
So they get all this financial flexibility and they still get to operate the factory. Because even though Honda owns the building now, the LH Battery joint venture just keeps running the place as planned. They just lease the building from Honda.
Precisely.
Yeah.
It's really the best of both worlds for LGES. They get rid of the debt from construction but keep control of the production lines and the technology. That's their core business.
Okay, so let's flip it. What's Honda's motivation for spending almost $3 billion on a building they already co-founded, basically turning themselves into a landlord?
For Honda, it's all about long-term security. It's about commitment.
Okay.
They actually said the deal enabled Honda to commit to batteries over the long term. By owning the physical infrastructure, they get maximum control over their own supply destiny.
It gives them flexibility, too.
Huge flexibility to respond to future needs for, say, pure EVs and hybrids. It insulates them from, any potential issues or a change of heart from LGES down the road.
This is where it gets really insightful for me. Honda has physically locked down the building they need to make their big platform shift. LGES gets the cash they need right now, and Honda gets long-term control over a critical piece of their supply chain. It's just a beautifully designed way to manage risk for both of them.
And that stability is absolutely critical because this factory isn't just making generic batteries. It's integral to the future of Honda's own vehicle designs.
Which brings us to Honda's EV strategy. The batteries from this Ohio plant are, well, they're essential for their brand new dedicated EV lineup. This whole deal is about securing the supply chain for their own tech.
Yeah, the models are already lining up. We're expecting this new line to kick off with the Acura RSX next year.
Okay.
And right after that, we should see the first two models from Honda's big new thing, the Zero Series EVs, an SUV and a sedan.
Now, we know Honda's been leaning on partners, right? Most famously using GM's Ultium platform for their first EVs, like the Prologue. Why is securing this Ohio plant so important now?
That is the key strategic difference. The cars coming out of the Ohio plant, the RSX, the Zero Series, they will be based on a new, dedicated, proprietary Honda platform.
So this is their own thing, not a collaboration.
Exactly. The Prologue was a bridge,
Yeah.
a necessary one. But the Zero Series, that's Honda's real long-term play for the EV market. And the ability to guarantee the supply of custom-made batteries for that platform, it's non-negotiable.
So by owning the building, they make sure that factory stays laser-focused on their needs, no matter what other business decisions LGES might make somewhere else in the world.
It gives them physical control over the infrastructure they need to pull off this massive platform shift. It's a huge, tangible bet on their own architecture.
And it seems like they're building in some future-proofing, too.
They are. The sources mention that Honda's not ruling out using the plant for energy storage systems, ESS applications down the road, which is a clear sign they're thinking ahead. They're anticipating a future where not every single battery they make will necessarily go into a car.
And that mention of ESS brings us perfectly to the wider market context. This deal did not happen in a vacuum.
Not at all.
LGES is making this move while there are some real industry headwinds. There's a global slowdown in EV demand and, critically, a lot of policy uncertainty here in the U.S., especially around subsidies.
To really get why LGES needed that cash so badly, you have to look at what happened just a few weeks before this Honda deal was announced.
The Ford contract.
The Ford contract. LGES disclosed a massive termination of a battery supply deal with Ford Motor Company.
And the scale of that cancellation, it's just hard to overstate.
It was huge.
Yeah.
The deal was valued at $9.6 trillion won. That's a stunning $6.6 billion in guaranteed future revenue, just gone.
Wow.
That agreement was supposed to cover $109 billion of batteries for Ford's light commercial vehicles, running from 2026 all the way to 2032.
So when you lose a commitment like that, suddenly getting $2.9 billion in cash by selling the Ohio building makes a lot more sense.
It makes perfect sense. It's an immediate financial patch.
And Ford's reason for canceling gives you the whole grim industry picture, doesn't it?
It does. Ford had to react to weaker demand and U.S. policy changes. Sources specifically point to the killing of certain EV tax credits.
So they took a huge write-down.
A massive $19.5 billion write-down, and they shelved several of their planned EV models. It's a direct line from market uncertainty to a massive contract breach.
So the dominoes fall, Ford pulls back, LGES loses a $6.6 billion revenue stream.
And that forces LGES to find a financial safety net, which is exactly where selling the Ohio building for $2.9 billion fits in. It's like tactical financial surgery to cover a really big wound.
So that's their short-term fix. What's the long-term play? That pivot you mentioned to energy storage systems.
That is the strategic safety net. LGES is actively and aggressively expanding its ESS business because fixed energy storage is a fundamentally different and right now more stable business model than the consumer EV market.
Because consumer EV sales are so sensitive to things like interest rates, gas prices, and especially those political subsidies, the tax credits.
Yeah, they're volatile.
Whereas grid storage, The demand for batteries to back up data centers or stabilize the power grid,
Yeah.
that's driven by much more stable long-term trends.
Exactly. Data consumption, regulations for clean energy, utility build-outs, it's a much less volatile environment.
And we're seeing this across the industry, not just with LGES.
It's a major trend. Sources mention that other big South Korean battery makers like SK On, who also had a JV with Ford, fall apart. They are actively repurposing production lines just to make batteries for these fixed ESS applications.
So the consensus is if EV demand is shaky, grid storage is the reliable growth area.
That's the bet they're all making.
So this Ohio deal is really a masterpiece of strategy. It secures Honda's EV future while giving LGES the cash it needs to fund its pivot into the safer ESS space.
And that brings us to the end of our deep dive. We've gone through a pretty complex story, but hopefully you now have a much clearer picture of all the layers involved.
Let's just synthesize the core takeaways from this. First, Honda spent nearly $2.9 billion to buy the physical building in Ohio in a leaseback deal, explicitly locking down long-term control over their battery supply.
Second, this deal guarantees production for Honda's super important new platform, the Zero Series, which marks their big shift away from relying on partners' tech.
And third, for LGES, this was a smart tactical move to get cash and improve their balance sheet right after losing that massive $6.6 billion Ford contract. It's all happening while they and other suppliers are pivoting hard toward the more reliable growth in energy storage systems.
So now you can see past that simple press release. You can understand the complex financial moves, the de-risking, and the real market pressures that drove this $2.9 billion handshake.
And knowing all this lets you analyze what comes next with a much sharper eye. We talked about how LGES is using energy storage as a safety net against the volatility of the consumer EV market, which is so often tied to, unpredictable government subsidies.
Which really raises an important question for you to think about going forward. Given that reliance on government policy and fickle consumer demand, what sector pure consumer EV manufacturing or fixed energy storage for things like utilities and data centers is ultimately going to offer battery suppliers like LGES the most stable and reliable long-term revenue in the North American market?
We hope you found this deep dive into the sources you provided valuable. Thank you for sharing your material with us, and we invite you to follow the channel for more explorations into the crucial stories shaping our world. We'll catch you on the next deep dive.